let's jump into things. Super late. It's quarter to one actually on well, I guess technically Monday morning, but it is on the Sunday, so it is the weekend wrap. Give us a chance to sort of have a recap of just how things sort of finished off for the week and that, and obviously sort of have a quick look at what we sort of potentially have sort of popping up coming up through this week because we've got a fairly big week coming up now because of course first week of the month means NFP week, and it is kind of coming into a sort of point where we're look. There's been a couple of times I said, look, we're going to see a make or break here, and look, one of the videos I titled through this week was literally that this market is making people that have been trading for a long time look like their first dayers, and that's because it is just super tight ranges, and looks like it's breaking one way, flips around, goes back the other way. Looks like it's breaking down, flips around, comes back the other way, and non-stop. So, look, it's not too bad. Like, I mean, all in all, we can sort of trade these conditions. It's not impossible, but I think the market is really just waiting for some sort of general consensus and idea of, well, what the hell is going on, because these trade sort of tariff things are basically what I consider to see as like obviously the main driver at the moment. Like, you'll always have a number of things going on, of course, but you know what I mean? The Middle East situation doesn't affect the markets at all. Ukraine doesn't really affect the markets at all. I mean, look, I'm sure these things may weigh in a little bit to gold, but in terms of risk and all this kind of stuff, which is pretty much predominantly what I trade, that's not really sort of factoring into this kind of stuff, in my opinion. I think it's pretty much just this tariff stuff and just uncertainty. And the uncertainty means people are cautious. People are cautious means they're generally tipping towards more the side of risk off. And we've seen this with gold moving up. We've seen this with a couple of the other assets, but then we're getting a flip of we're getting sort of inverse of these outlooks and that. As you can tell, it's quite late here. Outlooks and that with obviously equity markets starting to roll over, but continuing to be quite strong as well. So yeah, there's so much sort of going on at the moment, but I think NFP is really going to be something that's really going to solidify what's going to give us our next break. And I think sort of, the whole market's looking for, further down with DXY. And the question is that going to happen now, or is that going to have maybe a little bit of a schooling effect, get some strong data, which I think is the missing key for any sort of faith in the US dollar, at least in the short term while this trade stuff's going on, and then sort of rip a couple of those people out before then sort of succumbing down. So I do think, look, we probably are going to look down lower on US dollar, but I think sort of, there is a chance, and there's a couple of technicals to back it up, that we could see a little bit of a break a bit higher before we do see that major breakdown. But we are on the knees, and this is what we're trying to sort of ascertain at the moment. Sort of, is there any real sort of reason for it? So, look, finishing off the week in that, I'll just go over the last little bits of data that we have. We had core PCE coming in, which is obviously, as you can see, flattened as predicted, as expected. It was a slight little revision up as well. So it goes, I guess, a little bit sort of in the positive side of stuff there. And then you had consumer sentiment and the inflation expectations, which was an interesting sort of one because consumer sentiment, it's up a little bit here, it's ticked up. I mean, it's not flying, but it's certainly not moving in this doom and gloom. Everything's well, if you listen to a lot of these commentators and a lot of people are saying, oh, everybody's scared with the US and they're worried, and yes, look, they are, but then you get these little bits of data. These aren't market moving, market shaping bits of data, but they are things that you plug in. Consumer sentiment's up a little bit there. Um, it's not, it's at least moving in the positive direction. And this is what I'm saying, and I have been saying, if we get some positive data to back it up with the sentiment that's not actually too bad, I think people will sort of start to build the narrative that US dollar might be worth a little bit of a run, which then could lead for this squeeze higher. At the same time, though, you've got the counter argument here with the inflation expectations. Again, it's not something that's going to be sort of like absolutely dominating the market, but that moving down is obviously in a bit more of the dollar weakish kind of camp and that. So two sort of conflicting bits of data there. And then on top of this, of course, we had Trump sort of coming out with the 50% tariffs on steel imports. So again, with the late Friday session ramp up, with we're going to get sort of high tariffs, and a lot of people are just sort of going, yeah, yeah, whatever. We saw it last week with the EU. You sort of pulled it back by sort of Wednesday, sorry, by Sunday. And then let's just take this along here. And then where's the week gone? Yep. And then sort of everything sort of bounced right back. But I think it's going to potentially leave the door open to a moment where people are going to be like, oh, we don't believe Trump, and he's going to stick to it, and we're going to see a bunch of people get ripped on these things. So we'll see how we go. Obviously, got to see sort of as far as I can see now, the advantage of doing these sort of weekend wraps later in the weekend is you get a little bit of time to do a bit of well, to see if any sort of headlines come out, things change before market opens, obviously on the Monday morning, opposed to doing it first thing Saturday, where you've still got 2 days of data, which can change the outlook come Monday morning, just on this kind of stuff. And look, I know, so this is a bit of a sort of opening, sort of long opening sort of monologue, but this is what is inherently difficult with Trump in regards to sort of trading, that things can come out at any time, and you need to be with you there with your finger on the button. You need to be sort of listening to what's happening, because everything can look fine. It's like you're sort of trading the normal calendar. Okay, this data's coming out this day. Prepare for it. This is the expectation. This is how we're going to trade it. But the headlines can come at any time, and that can sort of really sort of just throw a curveball at you. So it's been quite an intense couple of months on that, I have to admit, so far. Anyway, enough of that. On to this coming week. So it seems like we've got a couple of bank holidays. Not quite sure what's happening over in New Zealand. We've got one in China and one in Italy as well. So a couple of bank holidays. A lot of bank holidays happening around this sort of time of year. But short of that, we've got sort of like inflation gauge month on month for Aussie. We've got job advertisements. There's no sort of real expectations here. We can see it's sort of slightly moving up there with job advertisements. Sorry. Um, and then inflation gauge, what we looked at recently. Again, look, this March is a bit of an outlier kind of thing. It's really sort of ramped up over here. Obviously, so these kind of things that, again, they're not the big ticket bits of data, but, they could see a little bit of a sway. But I think these are kind of just going to be lost along the way in regards of sort of Aussie data. The big thing is obviously what they're going to do with the US dollar. Moving through, that's about it through Asia. Moving forward, we've got PMI Monday. Do we have the Aussie PMIs though? No, it's a bit odd. I'm sure there's probably some reason for this. It's just too late for me. Anyway, so yeah, a couple of PMI bits of data that we sort of got coming out. Nothing looking spectacular. Again, these are the ones with the 50, the baseline, and that above 50 with expansion. They are looking to move in slightly stronger directions though. Mainly a couple of flat ones here, but you know, still sub 50. So it's kind of, again, it's that kind of gray area. So it's still in a sort of contraction, but not as bad as it was, slowly getting better kind of thing. Moving forward, we've got ISM. So ISM will probably be one that actually moves the market again a little bit more. And as I said, we've got a fairly busy week this week with the news. The last couple of weeks have been quite quiet for the early part of the week. But ISM manufacturing numbers coming out again, slightly bigger tick up. I feel that the market will be paying more attention to the US data and that than it will be to the European data, and particularly with what I trade mainly predominantly sort of obviously the metals and Aussie, but Aussie's not going to be so affected by this stuff, and gold, metals, and that not so much affected by this, but the US dollar can have a bit of a sort of stronger effect on that. So it's one to sort of watch out for Monday night / Tuesday morning. We've got Power Talking at 3 a.m., so it's always a fun one after a couple of talks. These guys speak a lot sort of through the week, don't they? And then we got the minutes coming out for Aussie on Tuesday morning, 11:30. So this could be quite interesting because obviously we had the all right, yeah, sorry about that. What was I saying? The minutes. Yes, obviously we had the cut last time. So it'd be interesting to sort of get a little bit more of an insight, but because we changed it this year with the RBA, that now we actually have the press conference afterwards. We already have a little bit of an understanding about sort of what they were thinking, and of course Bullock sort of said that the decision, well, the potential for a 50 base point cut was actually floated, which is interesting, and obviously sort of something that sort of weighs on Aussie a little bit there. While you're sort of seeing a couple of these other people, sort of like we had RBNZ sort of cut again, just excuse me, just this week, but they came out sounding a little bit more hawkish with their stuff. But as we know, RBA is always a little bit slower behind the curve with this stuff. And to me, it sort of still seems like they're in the dovish camp. And they're still, as far as I'm aware, sort of pricing three cuts between now and the end of the year. So that sort of brings us down, I think, 3.1%. So still some cuts to come. So it'd be interesting to see if there's anything new to sort of really unpack from this. But again, because we have that conference, I think that'll sort of be a little bit lost along the way. We've got China data, the PMI is coming out there, looking a little bit stronger for there, stronger for the Yuan if we do get some more positive numbers over there. Moving forward, we've got Swiss month-on-month CPIs ticking up a little bit. Yeah, interesting. Wader speaking. Of course, they're sort of whenever they whenever they like. Can't tell you. It's very interesting that they do this. China and Japan, they're the only people that do this sort of tentative kind of sort of stuff. Moving forward, we've got CPI from Europe, and again, that's looking to come down there. So, look, the inflation side of things really, you know what I mean? It's, I guess you could call it sticky across the board because it's kind of like got right down into it, sort of, and this is with a lot of these currencies. It's like right down near its targets. It's into that little band, but a lot of it seems to have stalled a bit. And so I think that sort of like has really shifted everybody's outlook, of course, onto sort of more the recession side of stuff and making sure that growth is still happening. I don't think inflation is so much of a concern, hence why they're able to cut at the moment. But it will be interesting to see if they do see a couple more cuts if this stuff starts to turn around a little bit. But for the time being, in that inflation's very much just a dead issue, kind of in the back on the back foot. Getting on to the bigger parts of data, we got Jolts coming out, 7 million. Again, it's a little bit early for their forecasts on that, but you know these are the ones that we want to sort of see. You know, are there going to be sort of stronger numbers sort of advertised in that? We can see last three prints, two prints have been sort of negative or under forecasts. So we'll see how this one sort of pops out at the moment. But these are the kind of bits that people are really sort of paying attention to. We've got JOLTS, which is the job openings, then we've got ADP, which is the private sector, and then we've got NFP, of course, at the end of the week. And you want to see that people are still, you know, going in line with, you know, consumer sentiment, confidence, and that. If that's pushing up, people are advertising for jobs, obviously more jobs openings. They're still looking to expand and, you know, produce a little bit more. Because as I keep saying with these things, but that's the whole point of trading, you repeat yourself over and over. But you know, you got to look at it. At what point are you advertising for jobs? Well, you're advertising for jobs when you're confident, when you sort of think, okay, bang, I want to expand, I want to produce more, we're going to be making more next quarter, so I need more people on the line to be able to sort of, you know, whatever job it is that they're doing, to be able to sort of fill that demand and the work that we're sort of going to be doing. They're the kind of bits of data that the market's looking for to have some faith in the US dollar at the moment because the tariff thing has really just completely shook it. So yeah, that'll be interesting to see if they can sort of buck the trend of the last 2 months and actually get a bit of a positive data in there. We've got GDP in Australia. Look, it's looking to tip down a little bit. Look, this could be something to pay attention to, but again, while US dollar is just such a prominent thing at the moment, I think these ones, like I said before, I think these are just going to take a little bit of a back seat with it all. If anything, it just adds to or subtracts away from whatever the move would be with US dollar. As in, if we get a weaker sort of GDP here, well, growth going down, okay, that's less production. So what would the market see this at? The market will be going, okay, well, you know, RBA is going to have to do something to help this. How do they do that? Well, you know, they need to stimulate. They need to, well, stimulate growth. They need to get people taking on more money, well, not debt, more money, whichever way you want to call it, so they can sort of then, you know, hire more, pick up production, and then pick that GDP back up. That's how they do it. That's the lever that they would pull in this instance. And of course, how does that relate? Well, obviously, if you're going to be sort of more of the reason to cut more, well, that's going to be weaker for the Aussie dollar. So that's certainly something to be looking for because Aussie, I'll get to obviously with the charts in a moment, has been trying to pump up above 65 a bunch of times and just gets smacked down every time. But 64, low ends of 64, the range is getting tighter and tighter. So 64 to 65 is getting very tight at the moment. Moving forward, we got ADP numbers expected to tick up, so that's interesting. As I said, these are the kind of bits of data. ADP doesn't hold as much weight as NFP, but I would say it's not even a precursor for it. I don't think there's a strong enough correlation. I've heard in the past, oh yeah, ADP could be a bit of an insight to NFP. In my opinion, it's luck of the draw. Sometimes you get this above, NFP will come under, vice versa. But again, it is something that you plug in as one of the numbers because these are jobs that are being added at the moment, particularly after they've been sort of like laying off so many people with the Doge thing recently. So if this comes in positive, you're probably not going to see fireworks with the US dollar, but it would start to sweat the shorts a little bit. We've got ISM services. Again, expected a strong bit of data there. So if you see the theme with the US data, a lot of it seems to be a little bit, at least on the stronger expected sides. Moving forward, and that takes us through till Thursday. Thursday, really overly of no trades balance. That's going to slow down. Again, not super positive for the Aussie if we are sort of slowing down here. Euro, we got okay, their rate decision. They'll be cutting. So if they're cutting, an interesting thing I've noticed with a lot of these people sort of recently, because they're so heavily telegraphed, the people have been the market's been pricing it in early. So if this is the expectation, you may see this sort of weighing on euro a little bit, which could be another reason for DXY to hold its lows till this bit of data comes out, and then you'll see a spark up. You saw it with RBNZ and the New Zealand dollar this week. It did eventually sort of break lower after a period, but as it initially dropped, people are sort of basically just closing their positions. Buy the rumor, sell the news kind of sort of stuff. So it'll be interesting. I'll be watching. I don't really pay super close attention to euro. I don't watch euro data live typically, but it will be interesting to watch how the market reacts to this because that's been a constant thing for the last couple of months now. I've been noticing. Got the press conference after that, and then moving forward, well, not a great deal. Nothing sort of super of note through here till, of course, ADP, NFP at the end of the week, and 130 is a fairly weak number, 4.2. Obviously, that's not too bad. You want to keep this lower than this area here. The higher this moves up with the unemployment rate, more in the camp of, okay, you got to do something about it, you got to cut. Numbers come in 130, that's pretty weak. More idea, we got to do something to help them, so you got to cut. And this is what I mean, is in like if you see the expectation with sort of the government job, ADP is looking to go up while NFP moving down. So I think this will be the big draw card for the week. We've certainly got a couple of big bits of data in that can sort of swing it about, but I think it'll be all building to this, and we'll be seeing a sort of make or break moment with the market, with the DXY, and with a lot of these crosses there as well. All right, so geez, well, 20 minutes and we haven't even looked at a chart yet. So let's get on to it. DXY. This is what I'm talking about. A lot of people are like, oh, we're coming down. And I've heard sort of things about bear flags and all this kind of sort of stuff. And I think the bear flag or something, it must have been something more like up through here that people were calling it. Maybe it was something like, yeah, it must have been something like this or something. I don't know. Does that work? Maybe. I don't know. Not really for me. I don't know. It's just on the 4 hour. Yeah. Anyway, could be, but it's not necessarily how I'm seeing it. I'm seeing it more as basically you got a big potential higher low setting up here. You've got a higher low in this section, and even in this last sort of sell down here, where this actually got smacked, which we'll unpack in a moment. This has also got a little higher low here. So if we sort of start in and then sort of drill our way out, you can see this is where the market needed to hold. We expected buyers to be here. We've gone through it. This is where buyers were, and the market reacted. And actually, you got a little bit of a push, grinded through, came up and hit basically 38% retracement of this drop down, and boom, came back down. Typically, I'd say you disregard the last candle, but it was almost a bit of an engulfing candle to close. So, as much as sort of everybody's sort of going, oh, no, it's horrible, should be down over here. Well, it did actually hold that into close. So, what I'll be looking for come Monday is if we can go back up over this zone here. I think definitely the downside is obviously this little section over here. But that's the area that I'll be looking for some early direction sort of through the week because, as I said, if you build this thing out, you've got a high, low, whatever. You got a high, I don't know what that one was, high, low in this section. So that puts more pressure and emphasis on this 99.6 level. You got a high, low in this sort of pullback down here. That puts the next level at these highs where it gapped up to on whatever that was. What was it? Sort of Thursday there. And then you build that out and you got a high low coming through here. So that means that 102 still is your main sort of target. So you've got three pretty crucial sort of levels that you're kind of looking at with three inside higher lows coming out with it all. Now, look, this thing could completely just come down here. And certainly, if you break down underneath 98.8, which I'll get to as a crucial point in a moment, yeah, you're probably looking pretty much in trouble. And, you're going to really have to sort of test what these buyers down here are going to be doing. That's your last line of defense. And this is what I'm saying. With NFP coming up this week, we've got a couple of decent bits of data coming into this. But I would say I would be reluctant to think that you're going to be breaking this prior to NFP. I think that there's a good chance that we do see this thing sort of tighten up a little bit and at least grind up here, but maybe ultimately kind of range through this area through the week. Look, like anything, I could be wrong. Let's just see how we go. First thing I'm looking for though, come Monday, is to sort of see if it does come down here, are the buyers still hungry? 99.15. Underneath here, obviously you've got your lows down here, 98.76. As I said, I'll get to why that's also important in a moment. But to me, it seems like, you know what, they had a chance to push it down here. They haven't as of yet. We'll see how they go with it all. If you do get above 99.6, then you're moving back up towards these areas over here, and we can start to look at the other sort of structures with it all. But I think sort of come Monday, they're the two levels that I'm looking for. Something like this, something like this, but I'll be favoring the idea that we'll be moving towards here. I think this is it's a bit of odd sort of sell down here. It was coming through quite soon, but again, look, 38% puts it in continuation territory. Hence, if you do break through down here, well, you look down to your next zone down over here. But to me, I think there's probably a chance that we sort of at least sort of squeeze up a little bit higher around that sort of 100 level. Just quickly on that as well, where we have DXY on one of these ones on a big sort of weekly chart been working on. We've got 4 DXY charts. This one. So what we have sort of seen through here, so this is that little, Elliott wave, yada yada, A, B, C kind of correction thing. I said the other week, sort of like when we closed right down here on the lows, and I was like, oh, look, it looks like it's just tough. It's hard to say something positive about the US dollar at this point, and that's generally the time that we're going to see these things shoot up, and that's what we saw, because this is the zone you would have wanted to see the close down underneath it. Sell down, support, sell up, find a resistance, third leg. This is a leg. It'll always come. You tackle the lows down here. Bear with 1 sec. It's even what time is it? It's 10 past 1. Oof. Anyway, look, we come back down here. What was I saying? Yeah, you tackle the lows down here. If you're going to get a close down here, fine. You can say that cycle's broken. You look for the pushback up. So basically this leg, whoops, this leg to come back up here, find resistance to previous support, continue the cycle down. That would have been the way that you would see this happen. We didn't get that. We got the move back down, but obviously found support where it needed to, hence the idea that we're potentially looking at something more like this. You could say it's technically a high low because yes, you got the lows down here and you got the high up over here, but I don't know. Like as I said, I'd like to go more off the body feel, particularly with such a strong trend coming down. You don't want to sort of go, yep, okay, it's definitely sort of going up higher straight away. But it leans more with the fact that it sort of held this low here to turning into a little bit more of a range down the bottom here. Now, NFP obviously this week could be the thing that breaks it back down here, or you get a strong number, could break it back up here. So I think your main big move is going to be a close outside these levels for the week. Now that's a big outlook in that. Well, for me it is anyway because I work on lower time frames, but it's certainly something that I'll be paying attention to. And I think there is a good chance that we get this happen this week. You got to remember as well with these little candles here, when I said, okay, this has to hold 98.8, well, it did, and it moved back up. This little candle coming down now, it is technically on the outside, retesting the outside of this channel. Put this on a daily. Do we still have our lines? We have actually put in a higher low, which is what I was saying before, and it is actually a breakout retest to the top side of this falling channel, which leads more to, at least for the time being, the sell down has stopped. These kind of moves as well, if you look at this on a weekly and you invert this, just to give an idea about the candle, this is a hanging man. Hanging man are generally reversal candles at the end of a trend. Yes, it's not this first one here at a trend, but in this little context of this section here, it was unable to sort of, again, 2 times it's had to push down through this level, and the buyers were there enough to hold it. Hence why I do believe that sort of like, I don't think we're going to be getting any sort of early breakdowns with it all, but on a weekly scale, I'll be looking for a breakout outside, above 101.20 or below 98.8. And that's why I was saying earlier, I'd mention why 98.8 was an important level. But I think it's too early to sort of just say, yep, we're definitely breaking down over here. There's too many large bits of data, and I think NFP, the market won't let it happen prior to that, which means I could see us potentially bouncing in a little bit of range with decent bits of data coming out. It could be moving us quite violently through this range, sort of through the week, I would say. But all right, so anyway, that's it from DXY. Let's move on. We got Aussie. Aussie, as I said, a couple of times it has tried to. Let's get onto. Where we at? A couple of times it's tried to get up above that 65, and it's been smacked on the nose a couple of times. We closed the week, I think, around here last week, and I said, look, be cautious on these things because, as I said, there's just too much saying that this thing should be moving back down, in my opinion. US dollar is always going to be the biggest driver. While this is on its knees, that's keeping Aussie a little afloat. But if US dollar does rally, that's going to be driving it down. We're going to see the Yuan probably weaken out a little bit more as well, which is going to be weighing on it. And we know that the RBA is dovish with expectation of 2 bits of data coming out this week on the weaker side. So that's definitely pushing it down there as well. So look, it's a very tough trade, the Aussie at the moment, to be honest, because obviously if you're trading the long side of this thing, you're going up here and you're sort of thinking you're going, and it's bang, smack down. And we've seen it a couple of times through here. This was a little triangle that we had. This was the final one. Bang, breaks out. 5-month high or something, I think this was. And it just went bang, crushing straight down. If you look at this on a sort of weekly timetable, on a weekly time frame, sorry. Where we are here. This isn't painting a beautiful picture, to be honest. You know what I mean? It's the whole sort of thing. Recovery's been great. It's moved right back up over here. 61% retracement of its massive sell down. I mean, look how ugly this was. So I forgot how long this went for. Where's the little time and day thing? So this was 98 days. So pretty much just straight bearish for what's that, like sort of 4 months straight or so. 3 months. That's horrible. Anyway, whatever. The point is, right now, that's not a great sort of fill you with confidence, even though you're in a bullish little bounce momentum kind of candle. This is the weekly. Your RSI's crossed over, oversold, looking to come down. It's moved up here. It's pushed down. In the last couple of minutes, it pushed off 64.08. So it got a little bit of a bounce into close. So if we go back on the 4 hour, you can see this thing. It tried to sort of rally up a little bit off the low into the end of the hour, into the end of the week, sorry. But, nothing sort of superstar with it all. So I think with Aussie, really, we can sort of almost drag a couple of these bits here back to sort of like where we were looking at that sort of zone box before, broke out back into it. And then obviously just this bottom side over here, which is actually pretty much, look, I don't even need this. Let's get rid of that. They're the two directions I'm looking for. Above sort of 64, call it 64.70 to be sort of on the safe side there. Below 63.90. Now, again, you're going to run into support again pretty quickly, as we can see sort of down here, 63.60s. And of course, if you break above here, well, you're going to be running into resistance again pretty quickly as well. This thing is a very tough sort of trade. As I said, look, this is about 6 weeks. We've just been sideways with it all. So you really want to sort of see major breaks. It's tough to call a big line on the top side, because, here's a top line, sort of a high, took out the highs, almost got there, clearly took out the highs, 5 month highs, still bang. So there's no clear line up the top side here, but there's certainly a pretty clear line, I would say, down underneath here. To be safe, I'd probably say underneath sort of 63.20, down under these extra lows down over here, because even if you do get under here, you do have a couple of little levels of support. If we get back on the other one, you can probably see it a bit better. This is where I've been sort of looking for with Aussie for a while, but 63, sort of 63.30, I think it was, 63.20. Yeah, these sort of wicks down under here. This is where I expect a lot of stops to be. If they did have stops up here, well, they've been chopped out a bunch of times. But I think that it really does still sort of favour more of a potential sort of pushback down to the bottom side over here. I think that we're probably going to see a little bit of a pullback in equity markets, which has decoupled. Aussie's decoupled from that a little bit more recently. Copper's not really doing much. Again, tried to rally a little bit into close, but I think the big drivers with this are obviously these three here, and majorly only just the US dollar. I think the US dollar will affect the yuan anyway, so it'll kind of drag it in its direction. RBA is not going to sway their decision on what the strength of the US dollar is, so it's always going to be a handbrake at this point on any moves that go up. So even if we do see this sell off and we see this kind of move, you still need to factor the RBA into the equation. It doesn't mean that Aussie can't run back up to 66 or so, but it means we're not going back up to 70 yet. It's something like this is your equation here. It's the biggest driver is the US dollar, smaller there would be the one, and then that would be sort of taking a little bit of strength out of the sales there, a little bit of a handbrake on what it could be doing. But for the time being, I do believe we're probably going to see this more move down here, but the big one's going to be US dollar. So see what happens with that this week. Short term though, above 64.70, below 63.90. I think that's going to give us our direction as to sort of what we're going to be seeing sort of through this week. But again, I don't think you're going to get a big breakdown here prior to data, prior to the NFP. If it does come down here, likewise, I don't think you're going above 65.40. But as we may see DXY bounce back and forward with those larger bits of data throughout the week, we could continue to see Aussie ping pong around a little bit. So any moves back down to these levels here, we haven't been back down to test these supports for a little while. I'd imagine these to be bought up, so you could be seeing higher bounces, something to this kind of effect, even if we do break down to 63.50. Test down underneath these stops down over here, a little bit of a squeeze early on US dollar across the market could push Aussie back down to these levels over here. But ultimately, while US dollar is still in that bottom zone, with the fear that they could break to the bottom side, with the possibility, not the fear, let's call it the possibility, it could break to the bottom side, that's going to keep Aussie still slightly bid. But that's the only thing that's keeping Aussie bid at the moment. They're not buying Aussie because Aussie's great. And I don't think these steel tariffs are going to be doing great for it either. But it just sort of means that till we see a direction with DXY and the US dollar on broad sense for the market, we're most likely not going to see major breaks of these two sides here. So if you want to sort of, well, if uh, anybody can do whatever the hell they want, any moves down here, I'll be looking to book some profit, maybe even having some little counter swings with some longs down here, just to sort of cover things to sort of go back up here. But I think certainly through this week, we're just going to be seeing more continued ranging. I don't think we're going to be seeing a breakout till NFP, and that's if NFP is a shocker. All right, move on. We got gold. Gold actually traded quite well through the week. It didn't break down as hard as I thought it may would have come down. Like I was looking for this almost inverted head and shoulder, sorry, inverted, this little head and shoulders through this move here. It came down, but obviously flew back up here. It's still respecting this top side over here though. So where we at? Onto the 4 hour. And as you can see, it came back up, tested where we had those sellers were, and boom, back down there again. So this is the zone I was looking for through Thursday, Friday session or so. A break of 33.10, targeting down at 32.85. We obviously got that. Moved back up, retested those levels again, bang, bang. It's not looking, look, it is more or less kind of sideways at the moment. I wouldn't say this move here is done. I could see us probably at least coming back down to test this zone over here, sort of 63. I don't think we're going to, look, let's see how it goes over the week or so, how it opens up in that. I think sort of certainly upside in that, if you can get back up above the 40s and get above this falling resistance, you could be looking for some potential move up higher if those tariff things really sort of kick on and spook the market. But again, I still think that we probably have a little bit lower to sort of test. I think sort of maybe back down towards that sort of 3,200 before we see some more continuous buying come in. Again, like everything, I could come back tomorrow and back up over here, but let's play with that when we get that. I think certainly if you get above this sort of 33.30, yeah, you're going to be running into this kind of level again already. But I think if you can get up around this sort of 33.30, 33.40 area, it opens up with the idea. You get a lot of people harping on about breaking this big falling resistance, which we saw it react. It's obviously watching it. Look at these sell downs. So it is working from there. So it's a matter of sort of like, is it going to continue to respect that? And are we going to see continue to dribble down over here? Possibly. If US dollar runs, there's a good chance that this gets a push back down to the bottom lows over here. 32.50 was the call, was the level earlier in the week. We took it out and market just went straight back on board with it all. So we saw a lot of things come out this week, actually, I should say as well, because we had, I mean, look, I covered this thing on day-to-day basis, but we had, it's too late now, and I'm like, oh, all this stuff happened. What was it? No, it was the court ruling with the tariffs in the US, where they were sort of saying, oh no, the tariffs are off, and we've blocked it all. And of course, you saw things markets sort of really fastly react, and then of course, they blocked the blocking, and the market sort of went back up with it all. And now it's sort of they've been given a 2 week sort of stay to both sides get their information together. Market moves back down again. So like it's as I said, it's very difficult conditions at the moment. Not too bad if you're trading intraday. Like honestly, yeah, I mean, if you see the levels, I pick out the levels and we trade towards those levels. That's it. But of course, you'd like to get onto some of these larger kind of moves, and a lot of the times you're seeing these things here. Nice little sort of level, broke down underneath, came back up, took out that high. I reckon this was just coming back up to hit all the shorts, move back in, and hence I still think that this is going to be moving in this direction this week. That's what I'll be sort of looking to sort of kind of sell into these moves. I think that I don't think that this sell down here is done and that we move back up here. But if we get up around that 33.40, my tune may change a little bit. But I think certainly you've got to be doing a little bit of work to prove itself back up there. I think more of the idea is that we're coming back down lower over here. The RSI's got a bit of room to move there as well on the 4 hour. Move along, we've got silver. Silver, I did actually take a short position into the end of the week. purely just based on the fact that we're coming down, we've got these lower highs coming through here, really strong sort of resistance level up the top over here. We did get a close down under this zone that we put in, or that I put in on Friday, and you are seeing potential backtest here. I think if we take out this wick over here, the breakdown week, so 32.70 there, I think this could be decent because obviously we've seen the strong reactions each time. These aren't levels, they're just sort of like hitting people out. So you wouldn't say, okay, here's support, here's support. No, these were just stops being hit to come down, stops being hit to come down. So you can't use them as levels. This one you can because it's okay, this is the most immediate that we're trading within. So I can use this level here. But in terms of these wicks, maybe this one over here, you can find some which actually lines up with a little bit of a thin sort of support through this area over here. Let's just make it a zone. Gets too confusing with all these different, whoops, template zone. No, there we go. That's an area where we could sort of see a little bit of support, which is this last sort of wick coming down over here, lines up with these highs over here, you know, down 32.60 or so. So it's not a big move as in we take out the wick, we come down, we're going to come into support, but I would say definitely probably around to sort of maybe the 32.30. That's the kind of area I'd be looking for us to have a sort of like, a couple of moves down here. Does this line up with anything? Yeah, I'll be happy to probably trade off this. And so basically, I reckon we get some sort of action reaction down over here, which is, what, 30 points or so from me. So not very far, not very far at all, actually. But ultimately, look, if we see a break, and particularly if we break this zone over here, I think that's more significant. Yeah, we'll get a reaction from this level. Is it a major level that's going to really hold up the market? Probably not. But I do think that, you may see a little bit of a bounce through here to sort of maybe do something like this. That's probably what I'd be looking for. And it's kind of counterintuitive because, like, you kind of think, well, if this is the channel, then potentially that's the move. And um, given how this has been, how it's been trading, there's a very high likelihood that that kind of thing happens. So, and look, it goes in line with if we're going to see DXY bouncing back and forth each day throughout this week off these bits of data that are coming out, well, there's a good chance that this continues to ping pong around as well. And this is how they all sort of work together with it all. So, look, I did take a short position, I think around sort of like 33.15 or so. So, yeah, only a small little bit of profit at the moment. But if we can get down over to the 58 and that, maybe I'll book a little bit of it just to be on the safe side because there's a high chance. It's all very well to think, and this is what I've been saying. Like all these things are very well to think that you're going to grab this position and ride it down to 26, but this thing's blown everybody out here. It blew out a whole bunch of people out here, and it's just doing the same up over here as well. So unless you've sort of in up over here and you've really grit your teeth and held it and grit your teeth and held it every single time here, good on you. But I think there's a good chance that even if we come down over here, we do see quite a sort of substantial bounce, something to this kind of effect. So I think, yeah, maybe I'll probably just book a little bit if we get down here. Not really looking to play it on the long side at the moment, though, to be honest. Moving forward, we have copper and copper. So we are back down into that zone. It is finding a little bit of support in the middle here, so we could probably put in a little bit of a zone here that we can work off. Look, if you get back above here, we've seen it try to get back up out of this previous kind of marked out zone a couple of times. You're going to be falling up here. Again, 4.8, that's the level you want to beat if you're going to sort of be moving back up. That's the kind of move here you're looking for. I think if you break down under here, you're going to be looking to test this zone down the bottom here. We are seeing a little bit of sort of buying pressure come in. It's kind of moved up a little bit off this already. So look, it does open it up to the idea that we could see a little bit of a bounce up over here. But I think any move up to the top is potentially just going to get that back down to it all. And I'd be looking still around this 4-6 area. I don't think this move here is done either. And finally, just with China, the Yuan. Actually, I looked it up how to say it the other day. Yuan. Apparently, well, at least according to Google, it is. We had the second effort and it actually came back. So if you look at the video I did on Friday, yeah, it must have been Friday morning, I think. And we'd had this test out the top of it here, push back down, and I said, look, if we close bullish on this, that's something worth taking note of. Now, it's not a major thing because obviously, look, we got all this stuff going up here, but this is a sort of a falling resistance it's been respecting since the middle of April. It's the 2nd of June now. So, we're on 6 weeks, 7 weeks or so with this. And it has finally actually moved out. So we had a couple of things we traded off this week. We had the negative divergence. This is on the daily, falling resistance. There's little support here, 3 drive down. All these things lead to it squeezing back up. We're starting to see that happen. If this moves back up here, this is obviously an area that we're going to see a reaction. This is the first time back up into it in a week or so. So you are going to see some pushback here. But what you want to kind of see is this kind of move here to then get back above there. And then you're opening yourself up to this potential, whoop, not that one, this potential squeeze move up over here. You could find as well that it closes this gap and then peters out. Again, it's in a bearish move, so till it's sort of back up over here, you got to expect that there's going to be people selling into this thing. But we have seen the break, quick retest, and then try to squeeze back in, failed. Retest, boom. So the sellers had a lot of time to drive this down lower if they're going to. We've now got a pretty convincing argument for a move back off the lows on a daily negative divergence. That's not going to end up after one day. So there's a chance here that we see this thing squeeze up. If we get it back up into 724, this kind of area here, I reckon there's a chance we see 728. How it's relevant is that, if we see a weak Yuan, that's going to weigh on Aussie as well. That's another thing that's pushing in the camp to be paying attention to if you're trading Aussie, that if we see this push back up, it's going to affect the Aussie definitely. It also weighs on gold a little bit as well. So the correlation is obviously there as well. So this is basically, you treat it as a US dollar proxy buying against Asian currency, well, maybe Asian, really sort of what Yuan and that's calling Aussie an Asian currency. But, we are obviously heavily affected by what happens with China as well. So that's what I'll be looking for, early pushes up into this area here. I don't expect it to go through first time, but if we sort of come back and we do a second effort very soon, so I'm not saying if we come back down here, if you come back down here, then you're looking for a range. But if we move it up and we rally from here and then push through and have another attempt coming through, then that's when I'm like, okay, I think this thing's going to break higher. And that's when I'm going to be looking for more confirmation on short Aussie. All right, that's it from me.